Let's start with a trend which is prevalent across almost every sector, more so in the B2C sector, which is that more and more companies are increasingly using data about the customer to personalize their offerings for that customer. Whether it's product personalization, whether it is service personalization, whether it is personalizing the channel, the point of purchase, whether it is personalizing what time of the day, morning, afternoon, evening, or night that they approach. And increasingly, the other way around, customers expect more and more personalization. Right? They expect, especially if you are already doing, for example, if you're buying things on Amazon, they expect Amazon to know more about you and to show you the relevant products when you're searching. If it's another kind of company, let's say a travel company, an airline, for example, they expect that the services that the airline can offer in-flight or pre-flight or post-flight could be personalized to some extent. A lot of companies it's expected from any company that is a high-tech company, whether it's an Uber kind of company, Amazon kind of company, all those kind of companies. And obviously such companies are the benchmark for the rest of the industry, whether it's in food or clothing or any other business. Financial sector is particularly one industry where customers expect a lot of personalization because the finance sector has a wide variety of products. No customer has the time or effort, the opportunity to read through descriptions of hundreds of credit cards or hundreds of insurance policies or hundreds of home loans from different companies or from one company. So my question to panelists here is, given this big thrust towards personalizing the customer interface, what are the lessons learned so far? Okay. What kind of products are customers more interested in having a personalized engagement? You could even look at what kind of customer segments are more interested in having a personalized experience. Is it students? Is it women? Is it Gen Z? Is it farmers maybe? Where do they want more personalization and not a general approach? And what is then the roadmap for the insurance sector? Should it go in for large-scale personalization? So that's at the end of this question. We should have some kind of conclusion. Are we looking at lots and lots of personalization? Are we looking at moderate personalization? Or, I don't know, maybe there's no need for personalization. That's the other extreme. So this is a question. Who would like to start? My questions are always open to all panelists. Whoever would like to start, please go ahead. Suresh ji.
In this country, I have been watching a degree of personalization which is most prominent in the case of family-owned jewelers who have very high degree of retention of the salespersons, sales girls, and when a customer walks into Tribhuvandas Javeri or in jewelry showroom of someone else, the person is sitting who had served her mother or herself 20 years back, 15 years back and all that thing. And that is a very big plus point in generating confidence in the mind of the customer that you are getting the right product from this jeweler at the right price, which is generally higher. In the case of our professional world, and I'm more focused on insurance and banking, we are having haphazard personalization. you see the attrition rate or shifting of the positions or the portfolio in insurance industry, you will be surprised. In 4 months' time, the relationship manager is changed. In 8 months' time, the branch manager is changed. And the customers are looking for confidence that we are dealing with the right company. So insurance broking firms bring that level of stability because in our company we are having people who have been serving for 18 years, 16 years and all that thing. But then the link is being broken by the insurance companies, where relationship manager of one health insurance company commits something, and then it is after few weeks the fellow is changed and the customer is left in a soup that you had told me or I was told this thing. So this haphazard personalization which is occurring due to frequent changes in the insurance industry has to be stopped, because it is breaking the confidence level, it is hurting the confidence level of the customers. So naturally I will come again. So I pass on to.
Excellent point, Suresh. Excellent point.
So, if I may just add, and I'll probably put it in a little different way. Is it personalization or is it customization? There are products that are applicable globally, which may not be applicable for India. What may be applicable for India, you're customizing it, and then you are personalizing it to the respective need of that particular segment, sector, individual, organization. The first aspect in any insurance, discussion is risk. Risk identification, risk quantification, risk mitigation, and then is risk transfer. Insurance is one very small aspect of risk transfer. And that's where I think if we look at it from a personalization perspective, right? I mean, and then you can keep going it whether to the segment of a farmer or to a Gen Z, or today the aspect of personalization is happening on apps, right? So it depends on which segment are we really talking about to cater. We need to personalize products according to various segments of the strata of the people in the industry. Today, people are looking at personalization from their car aspect. They would want to know, get not one annual car insurance policy, but a car insurance policy which is basically driven as per their need of the number of kilometers that they're riding, or depending upon their risk. If somebody is doing, motoring sport, then their need is different versus just an office goer perspective. And all of this is basically done digitally, right? So while I agreed with Suresh sir in terms of personalization is also with regards to touch point, but there is another strata of people who needs personalization of the products from the delivery perspective, from the service aspect, and the need. My need of insurance is very different from my age group people or any other age group people in any other metro or in any other rural perspective. And the ability of me being able to choose what I want is very important. Similarly goes for medical, for healthcare or for farmers or for agri products, or parametrics. Unless and until we start doing this level of segmenting the personalization aspect, we will not be able to deepen and strengthen the entire insurance penetration in the marketplace.
So you recommend going ahead with customization and personalization?
We don't have a choice.
In a substantial way.
Yeah, we don't have a choice.
Fair enough. Sounds good.
So Manoj,
Yes, Jitendra.
I wanted to add few things. Now, typically in a service industry, BFSI in general, insurance in particular, they have a typical problem when it comes to personalization, which I call is like, Basanti tera naam kya hai? This is the syndrome through which we are really getting plagued. Customer has just been empaneled, enrolled, the entire detail of a customer through KYC is available, but when the interaction with the customer is taking place, maybe by the other team at a persistency level, or maybe a customer engagement level, or maybe a claim, customer has to really prove oneself he is. Maybe if a second product is to be really pitched to the same customer, the protocols for the process and everything will be demanding exactly the same thing to be done. So the customer identity and other informations are actually getting lost. And this is the basic which customers are expecting. So one is the suitability need, which is in terms of you have a standard product, but how can you make that product suitable to my needs? And that's where there are regulator governed processes and the requirements which demands that one need to be really doing those goal setting, identification of the need, and creating the right kind of a fitments, the premium selections, the tenures, and so on and so forth. So that is one part of from a standardization of a product to something which is making it personalized. But more in terms of servicing that customer, there is a aspect which not only is required from the individual, but over a period of time, given the iteration and those issues which are there in the industry, one need to be really making it happen as a system. And that's where a data-driven approach is becoming a prominent offering from many of those companies. So since the data is available in the systems, so irrespective of the touch points from where the customers is reaching it out, irrespective of the next product which is getting pitched, how much of that information I can curate and make it available and offer a right thing for a customer. So the new trend which is happening is something called PASA, which is pre-assured, pre-approved, sum assured products which are there. So I understand the customer's entire database, and from there I am customizing a product which is really required for him and reaching it out with that element of salutations and the expressions. So it is actually meeting those kind of a requirement. So it's a small aspects of salutation to those aspects which are meeting all those requirements. So that's the space in which data-driven approaches are taking place. Given the fact that there are dynamics, there are iterations, people are not necessarily having the same tenure like Tribhuvan Das Javeri would be having an employee retention. But for a customer retention to take place, there are many strategic initiative and technology transformations taking place.
Right. That makes a lot of sense. Actually, what you said and what Sureshji said correlate in completely opposite ways, but they're correlated. Piyush, you want to add something?
So I just wanted to add one thing in terms of personalization and customization. This is a need of the hour. And all the customers, it's a human tendency that we require things as per our requirements, not as per the products available in the market. So if I'm a vehicle owner, I need to have a product in terms of pay as you drive. Not like I need to have for an entire year policy. I can have a short-term policy. I can have do it by yourself. So all these insurance companies are filing their products in regulator and providing that kind of services to the customer, wherein the customers can pick and choose as per their requirements, appetite and risk, and pay accordingly. And also as an insurance company, a risk carrier, it's our utmost important responsibility to pay the claim as and when required. So in terms of intermediary, it's very much important in terms of distributing the product, reaching out to the end customer. But in terms of settling the claim, having a risk on our head is the most important part. So as an insurance company, we always ensure and have reinsurance capacity also support so that we can pay the claim as and when any event happens.
Right. Of course, claims is paramount. It's the bottom line of the engagement with the customers. And there, is there a role for personalization in the way the claim settlement happens, or is that supposed to be as straight through as possible? What are customers looking for?
So in terms of customers, as a customer, recently I went through a medical treatment of my father. So wherein my company has provided a GMC policy. So I feel like an intermediary or the TPA or the insurance company who is actually paying the claim, the entire process should be very smooth. the easy to understand. It should not be a cumbersome process wherein an insured person land up filling lots of forms and the time taking is very high. So I experienced like the TPA and the insurance company, they settle the claim within 2 hours. So this is how it's required currently, and all the customers require the same kind of service. So as an insurance company, our responsibility increased more.
That's true, that's true. Okay.
Here I would like to add, insurance industry is hundreds of years old, and the language might have come from London, from other places, and inherited by us. And then health insurance came into this country in 1985 when New India brought the product.
Okay.
We are trying to be digital, we are trying to be this and all, but the industry under the leadership of whether IRDA or General Insurance Council has not worked on simplification of the language in the policies. The terminology is being used by this industry. And I can give you example and then come to the point is that in claims being lodged, recently we had 3 cases of urinary tract infection. And when the claim is going to the health insurance company, they are saying that it is pre-existing disease. There has to be difference between pre-existing disease and chronic disease. It has to be clarified to crores of persons in this country what is pre-existing disease. What we as broker feel, pre-existing disease is when chronic disease is there where one is suffering with heart ailment or diabetes or hypertension or thyroid. In case something happens due to that, then it is chronic and it is pre-existing. But if a person has never been hospitalized due to urinary tract infection, and in the overseas travel policy he had declared pre-existing disease no, then how is it that when the patient has been treated in foreign or some patients have been treated within India, that rejecting the claim by saying UTI is pre-existing disease. So with a view to keep their costs under control and all that thing, such haphazard, unreasonable approaches are being taken by the industry. And we have to keep a watch on it. And Barrows ma'am said about listing of the companies. Madam, the way the price of Star Health is going down, it is because it's a listed company. With a view to satisfy lakhs of shareholders, they are trying to match their top line and bottom line. And the way they have rejected the claims, they are suffering for that one. So listing of the company is very good. And yesterday I was watching one of the YouTube in which LIC is coming again and again from the market capitalization when it was listed to today or yesterday in the evening, it is down by 26%. Lakhs and lakhs of crores have been lost by the shareholders in this country in LIC shares and Star Health shares. Not because census is down or something, it is because of their karni, that is Hindi world. Whatever they have done, they know it. And some of the terminology is another that is single premium. Is it single premium being done by LIC insurance or it is competing with the fixed deposit scheme of the banks? Who is looking after this? Whether Life Insurance Council is looking after or ILTA is looking after?
Right, sir.
We have to control on that, this type of thing.
So what sir has pointed out is that quantitative growth cannot be divorced from qualitative parameters,
Yes.
whether it is trust, whether it is simplicity, whether it is transparency. So sir, you have identified some of the areas and customer sentiments on the stock exchange, uh, sentiments and the financial numbers and all that. I think everything has to work in sync if this sector has to grow and flourish. Otherwise, the weaker players are going to lose business for whatever reason. But I want to move on to another point, which is that in the financial sector, fintechs have played a big role in the last 8 to 10 years, particularly more in the last 3 to 5 years, where they have helped banks and to some extent NBFCs expand the reach in a much, much bigger way. And offer, especially the Gen Z kind of customers, a different way of dealing with the financial institutions, which hitherto was more like going to the branch to get the business done. Now it is more happening on the digital front. So same way in insurance, what has been the role of fintechs and insurtechs from the customer side on helping the companies be more customer friendly or be more transparent or be more helpful in some way? What has been the progress and the limitations? I mean, I'm sure these fintechs and insurance techs are not, could create difficulties with, like Suresh ji explained, maybe because they're not aligned with the regulations that well, maybe they do not understand the practices in insurance companies that well. So ultimately, it's a partnership. No partner understands the other side completely. They're bringing in certain competencies that the insurance companies don't have. So, in terms of engaging with insurance companies and insurance brokers, what do you see as the role of fintechs and insurtechs? Yeah, Jitendra.
So typically in an insurance, there is a new business, policy servicing, persistency and claim. This is the set of process steps which are there. So for each of those steps, from an acquisition which has taken place where a customer has shown his consent, he has shown his interest, capturing of those entire detail used to be manual. Now that is no more. It's becoming paperless. There are back-end decisions which are done, and that's where there is a delay in processing this entire policy issuance process, which used to be in days, which could be now converted into in a flash of a minute, and there is a concept of like STP, straight through processing, which is taking place. So all those back-end processes and the activities which are taking place are becoming front-end. So there is a zero distance between a back-end and front is something which is the major change which has taken place. And this substitution or elimination of those cost, processes, TAT, impacts and other thing is only taking place because of the extent of digitizations. And that's where the fintechs and insurtechs players comes in with their stacks, with the API applications, with the solutions which is solving the problem for maybe a KYC related to maybe surrogate data to be really provided given the larger ecosystem data available for that person, making the entire payment gateways smooth for customers and so on and so forth. So the journey of new business is having a much smarter trim TAT efficient process which is taking place. And it is traveling across all the category, be it for the life insurance or maybe a general insurance or even for a health insurance. So, so this is one area where the digitization is playing a major role. Next comes is basically where the underwritings are taking place. Mm-hmm. Now that is something which is considered to be the skill set of the underwriter. how much of that is standard and how much of that is non-standard, and the cognitiveness of that component is now being merged over a period of time, and the processing efficiency of the tools, the digitizations are actually helping some of these underwriters to really work on more of like verifying it, the details. The orchestration layers are becoming much more efficient, and that's where the getting those data which was lying in different silos, different databases, different systems are getting orchestrated much better. So the person is using his or her time much more efficiently. So the time for maybe an underwriting earlier could be 30 minutes per file or for policy, could be now making only 3 minutes.
Okay.
So that's the kind of a TAT reduction, waste elimination, cost reductions is taking place. So take one by one and you will find that across the data points which were scattered across those touch points, now they are much more organized, and it is only because of the digitizations. So there are multiple technologies, multiple players which is really helping it. And I am sure
Is it driven more by technology, or is it because these fintechs and insurtechs are better able to access more data from different sources?
so it's
Is
like, say for example, a typical empanelment of a customer in terms of a policy document requires multiple adjacent documents which is related to KYC, related to financial status of that customer.
Mm-hmm.
Now, some of these informations need to be provided, which is more of a statements.
Customer
So
provides.
somebody is reading it, entering it. So that's the stage in which erstwhile the industry was. Now there is no need. The extraction of a data is taking place through an OCR engine. So, and then the person is not necessarily verifying with the, each and
No,
every
Jitendra,
rows,
my
but
point
there are
is,
verifications.
my point is not the process. Is the value addition of the fintechs and insurtechs. What exactly is the value addition? Why is it they are able to do this, which the insurance
the
companies cannot?
Because they have a technology,
The technology.
which is like an OCR based technology, a cognitive engine which is understanding and seeing all those details and doing the verification which a human being earlier was doing it. So the whole need of data entry has been eliminated. The extent of verification which was taking place is also eliminated. All those rule based assessments which we are getting done is already fed in as a part of a AI/ML capability. And then there are decisions which are flashed, which the person would be in a position to then verify and then put his or her verdict. So the effort of making has been just converted into just verifying or approving it.
Okay.
So that's the efficiency which has been brought.
So the automation of all the manual processes,
Absolutely.
including the cognitive parts.
Sure, sure.
See, whatever is told is very correct, that with respect to issuance of individual policies or retail policies, success has been achieved. But marine cargo insurance policy is taking 15 days to 21 days by the insurance company, and a reasonable complicated property insurance policy issuance is taking 6 to 8 weeks. So it is that let us not say that things are in good shape, where the corporate policies or the industrial policies or property policies, that they are really causing harassment to the customers. So when you are answering, you will not have it, whether you have, or it is that let the General Insurance Council compile the data that what is the truth behind giving service to the corporate world. Who are the main, that is people who are giving the business running into crores and crores of rupees. A client who has given a 40 lakhs rupees property insurance check, and that is, has to satisfy the bank that the property is insured, and that is, and we provide that handheld letter issued by the insurance company. This is to certify that the payment has been received and policy is being issued. This is harassment.
Sir, I think you have opened the opportunity for fintechs to start looking at this. Because where there's a problem, that's where fintechs rush in
They have
and
to
try to find
they
a
have to-
better
we
solution.
we have to take care of the corporate world equally. We should not be fooling ourselves by number of policies. If you look at the data released by Insurance Brokers Association of India, the number of policies paid are this percentage, claims paid are this percentage. Why there is a difference? There is another, that is in case the number of claims have been paid to that extent, in rupee terms also it should be the same. I'm not talking of 90% there and 60% here. You must have realized it. You have analyzed this figure. Yeah?
Yeah, fintechs
Yeah,
is
to be
more
done.
in the retail space.
Exactly.
not
So
in
I
the
think
corporate.
if you look at it, right, where is, if you see fintech started and then it did a lot of good work in terms of including people, the reach and ease of doing business. Similar is the story with InsurTech. InsurTech is successful at this point of time only with B2B2C or B2B2E. It's not basically for B2B at the moment. And that's where the idea of InsurTech is to do products and solutions where they're able to reach to a much larger population, whether it is from customers of the corporates or employees of the corporates, in doing embedded solutions, in designing embedded aspects of it, or aggregating multiple needs under one policy or one roof or with one insurer, so that the touch point of the customer in terms of their need reduces. And the same aspect of insurtech, because they're heavily backed by data and analytics, right? That's the reason why a lot of insurers are in a position to also help and support them. At the same time, this plays a key and a pivotal role in the entire customer experience, also from claims. Since the entire onboarding process and the entire aspect is digital, also is the same as the story on the claims process as well. It has not as such worked on the B2B segment as yet, and that's more done through the traditional route. Can that be done through InsurTech? Answer is yes. Will it be done? Yes. Does it need more time? Yes. But there is also a lot of, as we said, earlier in the first question, personalization and customization. That is something that a lot of insurtechs may not be able to do on a corporate to corporate basis, but they may be able to do for a group of people on corporates or group of employees or group of customers.
Sounds good, Amit. So interestingly, Jitendra talked about the role of insurtechs in terms of automation, reducing 10 days work through maybe 10 minutes. And Amit talked about transformation. So rather than working with an individual, working with a group, or a transformation in the sense of embedding products into something else so that they're more widely accepted. So these are the kind of things that insurtechs are good at. And Sureshji opened up the gateway of what the next thinking that insurance tech should be looking at to reduce complex products, the bigger, larger products, large value products, from days and months to minutes, hopefully. And so Piyush, you touch with a very large segment, that is the rural and agri and government. What do you see as the current and future role for insurtechs?
So, rightly you asked the question, what is the role for the insurtech and fintech in the rural and agri segment? So I was just about to come on the same topic, like you are asking how different are these insurtech and fintech as compared to the insurance company, and what value they are adding and how they are different. So in terms of, I will give you an example like cadastral map. Cadastral map is something, if in a village there are 100 parcels of the land. So each and every parcel is having a survey number 1 to 100.
Right.
But buying those cadastral map from the respective state government is very costly affair. Also, the insurance company who have been allocated a district or the cluster of a district for crop insurance per se, they get allocations for 1 year, 2 year and 3 year max as per the Government of India guideline. So buying those cadastral map with a very high price and using it for 1 year, 2 year or 3 years, it's a very costly affair to manage when you are dealing with the farmers scheme and all. So these fintech and insurance tech purchase those cadastral maps. They embedded in this in their app and technology solutions, and they provide to the insurance company, whoever the insurance companies are there in the particular district, for 3 year, for 6 year, for 9 year, or later on also. Also on the second part, in terms of we were discussing about the remote sensing license before this session. So in terms of buying the software to analyze the yield estimation through technology, NDVI value calculation, NDWI calculations, you require lots of software, which is very costly affair. So there are fintech companies available in the market. They have those kind of software and solution. They provide the same kind of result to the insurance company in a 2 lakh, 5 lakh, 10 lakh cost. But if you are going to buy those softwares by your own, having a proper lab for the RST purpose, it's a very costly affair to manage. So these are the things which is correlated in between, and by those things only we are able to provide the services in a very low cost.
Correct, correct. So wherever the margin is less, fintechs and insurtechs can do a value compression, cost compression, by creating value for both sides actually, the customer and the insurance company. So that's another niche for insurtechs to play a role. More like a kind of aggregator come economizer kind of role. Sounds good, sounds good. So friends, let's try and move along. Let's, since we're running on time, let's take up one more question for discussion. And this time I want to talk about the distribution partners. So banks in particular have a very wide reach in India. And that is something for insurance companies to ride upon. So maybe Piyush, you can start with this. What has been the experience of working with public sector banks, private sector banks, regional rural banks, cooperative banks, urban cooperative banks, rural district cooperative banks? There are so many varieties of banks. What has been the experience for insurance sector to leverage these partnerships? And what cases are successful? What cases are less successful? What do you see?
So basically, if we see in our day-to-day life, we are dealing with the some or other financial institution, some PSU bank, private bank, cooperative, RRB, and multiple kind of banks to have our day-to-day basis requirements and services. If we are into service sector, we are dealing for the salary purpose, credit card purpose, and multiple expenses. If we are into business, lots of loan kind of requirement. If we are into agriculture, the crop KCC cards are there. So banks play a very important role for the entire economy. And for the insurance purpose, it's the same. If we see the PSU banks, the big banks are already having a multiple tie-up after 2016, when IRDA approved to have a multiple tie-up with the insurance company. Banks are at a mature level and providing cross-selling to their customers some or other requirements of the products. In terms of private banks, they are at a much more mature level. They are providing customized kind of services to their customers, AI and ML based offerings and sales pitch. But in terms of, we talk about RRBs and cooperatives, and these are all the rural centric kind of banks, and we all know rural India is the real India. So that way, all these DCCBs, urban cooperative banks, RRBs are having the maximum number of accounts in their banks. But those banks are not digitized fully. Those banks are not well connected. They are not having the CA license as well. Out of 1,430 cooperative banks are available in India, 106 cooperative banks are only having CA license. So that means only 106 cooperative banks can sell insurance product to their customers directly through the insurance company. Other cooperative banks are also working, but they are either working in bits and pieces, or they are involving some kind of intermediary to sell those products. So there are huge scope in terms of increasing the penetration at rural area by the way of cooperative banks and RRBs, and lots of work needs to be done in that ways.
Okay. So those that are 106 that you mentioned, are they able to do a good job or an average job, or there's still a lot of scope for them also to do more insurance business?
So out of those 106, we can say around 8 to 10 urban cooperative banks like Cosmos, Saraswat, Janta Sahkari Bank, Abhyuday Bank, Bombay Mercantile Bank. So these are the big cooperative banks, Himachal Pradesh State Cooperative Banks, Bihar State Cooperative Bank. These are the big banks and they are doing good in terms of insurance sector. But other cooperative banks who are having 10 branches, 15 branches, 20 branches, or some of the cooperative banks are having one branches as well. So in that manner, they are not able to provide a proper cross-selling or offering to their customers as well as the DCCB. So all the districts are having district central cooperative banks. There lots of activities are still manual activity and they are not able to cope up with the requirement of the customer in terms of insurance per se. So
Okay.
to increase the penetration as an industry, as an insurance industry, as an intermediaries, we have to approach to these cooperative banks, DCCBs, and convince them to have a CA license directly or engage some kind of intermediary to offer the products to their customers, because large number of KCC holders are based upon these DCCBs and RRB banks.
And one more question. Is there any regulatory guidelines that are making it difficult for these banks, the non-106, the rest of the 106 to get into the insurance space?
So in terms of regulatory point of view, primarily all these MFIs and NBFC industries are facing challenges in terms of any bundling of the products. Regulator is not allowing. They ask them to cross-sell after 30-35 days of the issuance or sanction of the loan. Okay. But in terms of cooperatives, if the cushion of 30-35 days, post that they can do the cross-selling and they can offer some kind of product to their customers. But somehow they are not able to cope up. So they are majorly dependent on the government schemes like PMJJY, PMFBY, Ayushman Bharat. So they are dealing with those kind of government schemes majorly.
Right. Yes, Suresh.
See, the question which you posed, I would have answered it that these rural banks, they are not going in for corporate agency because of the amount required as the equity to be put into the corporate agency required by IRDA. So they don't have that much of, I think that figure is 25 lakhs rupees.
No,
No,
it's not like that.
corporate agency.
No.
How much it is?
So corporate agency, I doubt it's more than 2-3 lakhs rupees.
No, not at all.
So
Not
recently we were in a discussion with the state cooperative banks. They applied for the CA license. It's not more than 2-3 lakhs.
Okay, I disagree on this point because I say that corporate agency regulations of IRDA require 25 lakhs rupees, and we are in touch with some of these banks, and the reason why they are not going in
so
for
it is 25,000 only.
Huh?
25,000 only. Registration fees is 25,000 only.
Okay, let's be in touch with each other, and you look at the regulations, and there is a requirement of a principal officer and all that thing. So adding one person who is well versed in insurance and to be taken as by the bank as a
Definitely,
separate, there are some
cost.
issues as a result of that they do not do it.
Fair enough.
But then it is that on what is emerging out is, I would like to add that Banca model is good for pushing or selling the products.
Okay.
And it is very, very low when it comes to claim settlement. Providing support to the customers in lodging of claim and settlement. As a result of that, in India, some which is not regulated, it is unregulated, that insurance claims consultant firms like Insurance Samadhan, that is, they have come up, and it's a growing industry, highly profitable, where it is that you are not regulated by the regulator, you start the business.
Wow, what is this sound? Huh? Oh, I thought it was some machinery. Okay, time's up. Let's start winding up.
And the fee being charged by companies like Insurance Samadhan is 25% of the claim amount as the fee. It's a very good business for maybe 2-3 of you who are looking for opportunity in business, in insurance, set up Insurance Samadhan type of company. As the banca will grow, there will be more and more customers in this country who need you.
Yes,
Just wanted to add,
So let's move quickly now.
just wanted to add, banca as a channel is the way to really go about, because in the morning we spoke about what Veroz shared some of the data in terms of penetration. And the very presence of banca branches are there. They are the trust builders for the larger citizen. And they are not just, we need to be really looking into banks alone. We need to be really extending to NBFCs and MFIs and all those people in the micro markets which are existing and dealing on the financial products. And that's the vehicle through which we can create an alternative channel of making insurance really penetrated in the business. Yes, the acquisition journey is in the right track, but however the servicing and other dimensions what Mr. Suresh spoke about is yet to be really looked upon because of the hands-off and other thing which is taking place. So it's a right thing, but larger enablement and other dimensions of touchpoint servicing, if that is improved upon, should be really helping the larger ecosystem.
Correct. So that's
Mis-selling and other things are there.
RBI is likely to come in the
Concentration, risk, capping.
sounds good. Sounds good. Yeah, if you want, we can have time for 1 or 2 questions. Anyone from the audience?
Hi sir, my name is Manoj. I represent Flashade. So I do understand, and we all know banca does help in pushing the lot of volume. But usually banca channel is more looked at कि चिपकाया जाता product को. It's an attachment product. First time तो आप लोग बेच देते हो, but then renewal में हमेशा issue आता है उसका. Right? So how do you see that?
So how does the banca channel perform in terms of persistence?
So basically, if we see, rightly you mentioned earlier, it was happening like chipkaya jata tha product, attachment products were there. That's why RBI has come up and they clearly mentioned that before 30 days, after 30 days of any sanction only, you can do the cross-selling. That means actually you need to reach out to the customer and do the cross-selling. It's not like chipkaya jana of the product. And in terms of renewal, you rightly mentioned that renewal percentage in terms of low ticket size products are very less. But if you talk about the bigger segment and products like home loan, insurance, the BGR and GRPs and all, so their renewal percentage is very good. So in terms of low ticket size product as an industry, of course, the focus should be there and it should be kind of pre-consent should be taken from the customers. And if you're talking about a chipkaya jana product, it's always ranging less than 5,000 per year.
So Piyush,
premium,
mostly
not more than
the products which are there attached with the loan, most of the customers don't even know कि उनके साथ एक insurance दिया गया है. Right? When they come to know कि अच्छा insurance भी था साथ में, and then उसके बाद अगर renewals के लिए जाते हो कुछ अलग product के लिए, then the issues you have seen is very less.
Correct. इसीलिए अभी if you talk about it's not kind of bundling. So entire industry as well as the customer also face those kind of challenges. So now it's very clear that no product will be bundled unless the customer consent will be there. If customer consent is there, of course customer will be aware of the premium what they are paying for the particular risk and product, and accordingly the renewal can be done.
Okay, thank you.
Okay. Thank you so much.
I just add this one.
Sir, yeah, briefly.
Banca channel and NBFCs, when they give loan, they push life insurance policy to the borrower or co-borrower and all that thing. And these persons, because they need loan, they assume it that if 10 lakhs is being given, okay, I will get a 9.5 lakhs, 50,000 jane do. That is why The figure you should look at is what is the persistency ratio in life insurance policies. And Bajaj Allianz Life is a very good example, because people do not pay after first year, after second year, after 5 years, you will look at the persistency ratio of Bajaj Life. You will be shocked. This is I will say that putting condition by banks that you have to buy life insurance policy through us as a part of loan, it is not at all desirable. It is not needed by a country in 2025. This type of pushing is totally undesirable. And my colleague, he said कि जी आप insurance industry से बड़े दुखी लगते हो. No, I run Insurance Foundation of India, which is a not-for-profit organization, and we stand for policy advocacy that insurance industry needs to be improved. Then only the penetration will increase. Otherwise, this figure we have been listening for last 20 years. How can insurance penetration go down in a year? Barrows ma'am gave you the figure. Thank you, sir.
Thank you. Yeah. One last comment from
No,
Ravi.
I just like to add, what Mr. Suresh Sethi said was 100% right. 25,000 is just the registration fee, but you have to maintain a capital of 50 lakhs for corporate agency. I just wanted to clarify on that.
Okay.
You can refer to IRD website. Thank you.
Thank you. So to conclude with the point that the negative angles that have come out, insurance industry has definitely a lot to fix. And one recent example is the CEO in US, of a CEO of a United Insurance or some company, was literally shot. It's been in the papers. Why? Not because of some mad guy carrying guns, but because there's a huge population of customers whose claims have not been paid, legitimate claims it seems. The claims have been dodged by using this or that terminology. So there is a lot of dissatisfaction as well. So let me extend that and say even among employees of insurance companies, there will be different kinds of satisfaction, dissatisfaction. It is for the industry to fix, because without fixing these problems, there's no way we are going to have insurance for all. So let's pause, end this session at this point. Yes, there's a huge opportunity, but there are a lot of problems to be solved on the way. Our panelists have enlightened us on both the opportunity side and the challenges side, and I appreciate all of you for bringing that out. Thank you very much.